All right. Today is Wednesday, the 27th of April. This is a recap for the stock market activities today. Folks, I got a good one for you tonight. And let's start by this. The market bulls are getting punched left and right, left and right, left and right, with no mercy at all. They're getting punched by inflation. They're getting punched by valuations. They're getting punched by Jerome Powell, the hawk. They're getting punched by Putin. They're getting punched by the misalignment between Jupiter and Uranus. But the good news is the bulls are not down yet. Keyword yet. Matter of fact, they're like Jake LaMotta from Raging Bull. Hey Ray, you never got me down. You never got me down. Look, I'm not down. You never got me down. I'm gonna ask you one more time. Did you my wife? Anyways, of course, now we're going to hear somebody from the comments. Gen Zer, I'm 20 years old, bro. I don't understand the reference. Well, lay off the stupid TikTok of yours and watch Raging Bull for a change. But anyhow, we're getting a lot of earnings out of the way, folks. Yesterday we got Microsoft, we got Alphabet. Today we got Facebook, aka Meta. And yes, the bulls are going to get a rebound rally, the oversold rally, the relief rally, whatever it is. I'm playing that. I'm betting on that. But you look at these earnings, and they make it clear the party is over. For this economy and this stock market, it's done. The good days are behind us, and the worst is ahead of us. And I know what you're going to say. You're going to say, what's up with the darkness and the pessimism, bro? I'm not making these numbers. The numbers are the numbers, and they're saying a story, a bad story that's about to come. You want to look at the glass half full? How about the depression, the upcoming depression? It's going to be fun. Think about it. We're going to be waiting together in bread lines, taking selfies. Hashtag, I don't have to eat the dog anymore. We're getting bread. You take your cap off. They pour a spoon full of soup in, and you eat that for lunch. Good times are coming. But we're going to talk about that and the earnings and a lot more. So let's not waste any more time. And here it is, in focus tonight. Stranger Things. No, not on Netflix. They're happening on Twitter. And then we're going to talk about, is it going to be a rebound or a crash? What's going on with the market? Lastly, let's go over earnings reviews, and they're absolutely stunning. We start with the number one story in business news right now, the takeover of Twitter by Elon Musk. And yesterday I said perhaps the billionaires are conducting revenge against Elon Musk by dumping their Tesla shares, because what enabled Musk to take over Twitter and disrupt their oligarchy and their monopoly over free speech is the fact that Tesla stock got really inflated and overvalued. And this enabled Musk to take a lot of cash, billions of dollars, dumping that stock, and he can do whatever he wants with the cash, and more importantly, using those shares of Tesla, the overvalued shares of Tesla, to acquire whatever company he wants, in this case Twitter. So if they crash the stock, the power of Elon Musk, poof, gone. And some of you said, oh, what's up with the conspiracy theories, bro? And I say, you know what? Grab your tinfoil hats and put them on. Because, whether you like it or not, we are living in a deep state globalist oligarchy. Everything is owned by these billionaires, and they all have the same agenda. These oligarchs range from Jeff Bezos to Eric Schmidt to Omidyar, that's a big one. All of these deep staters, billionaires, oligarchs, and Elon Musk disrupted their game, and now they're coming for the jugular. Elon Musk is already losing the bid to end the Twitter sitter deal with the SEC. Watch how fast the SEC is going to wake up from the coma and do what they were supposed to do before and take Elon Musk down for all of the scams and the pumps and dumps he initiated. But if you say, hey, it's a conspiracy theory, bruh. What about this? Jeff Bezos came out of his hole immediately after the news that Elon Musk got Twitter. Why would he get out? He doesn't tweet a lot. Why would Jeffrey Bezos come out of his hole and start tweeting about Musk and accuse him of giving China leverage? Dr. Evil says, interesting question. Did the Chinese government just gain a bit of leverage over the town square? Question mark. But Dr. Evil is a pussy because he backtracked and he said, but we'll see. Musk is extremely good at navigating these kind of complexities because he's afraid that Musk is going to attack him by memes, yada, yada, yada. And I say, Mr. Bezos, if you're going to attack somebody, do it the Maverick of Wall Street way. Go full blast. Don't mince words. Just say it. Say it like this. Elon Musk is a CCP bitch. Done. You don't have to backtrack and say, but we'll see. Musk is very good at navigating things. Yeah, he can navigate things just like his souffle, crashing into planes and such. But folks, Twitter is in a crisis mode right now. The CEO of Twitter says, or told his staff, no layoffs are planned at this time. Nothing is going on here, nothing to see. Please disperse peacefully. But he admits that it is a period of uncertainty following Elon Musk buyout. And I say if anybody's going to lose their job, it's going to be Agrawal, the CEO of Twitter. So watch out for that one. But strange things, mysterious events are happening in Twitter right now. The moment it was announced that Elon Musk took over, people are saying we're gaining more followers, we're losing more followers. Our comments are appearing again. My tweets are getting more likes now, less likes. What's going on here in Twitter? They say it is due to a mass deactivation and mass joining of Twitter's platform by other groups. It sounds a little mysterious, specifically when it has a political hint to it. Listen to this headline. Big Twitter accounts on the left are losing followers, and those on the right are gaining since the Musk buyout was sealed. Look at this. Taylor Green, whatever her name is, gained over 41,000 followers. Ted Cruz gained over 40,000 followers. Laura Ingraham got over 27,000 followers. And look at this, even Joey B is getting more followers. 26,000 new followers for Joey B. And rumor has it, Joey B said, for real, man? Only 26,000? Not 81 million? Come on, man. And then we have losses. Barack Obama lost over 5,000 followers, AOC over 11,000. And look at this, Michelle Obama down almost 20,000 followers. So what's going on here? Look at this. Elon Musk buys Twitter and immediately conservatives get more followers, liberals go down. What's going on here? Even the Auschwitz Museum lost 35,000 followers. Strange things. What's going on here? People losing followers, they're gaining followers. What's happening? Well, Twitter said the fluctuations in followers counts were caused by new accounts being created and existing accounts being deactivated. The results show a sharp shift in sentiment and an ideological divide over Musk buying Twitter. While we continue to take action on accounts that violate our spam policy, which can affect followers' counts, these fluctuations appear to be largely have been a result of an increase of new accounts creation and deactivation. Oh, really? Rumor has it this is Twitter headquarters the moment it was announced that Elon Musk took over the company.
Oh no! Mom's almost home! Hey, Mom.
Oh, yeah. Let's cover up all the nasty wrongdoings, censoring folks, erasing followers, adding fake followers, manipulating the algorithms to pump up certain tweets, certain comments, and hide others. Oh, yeah. And I say, if Reverend Elon Musk buys Twitter, he better do the forensics and get out the dirty laundry. Look, for example, at the whole Johnny Depp fiasco. Last time we covered this subject, I showed you the fact that we have thousands of fake accounts on Twitter, bots supporting Amber Heard with hashtags and attempting to make the whole thing into a gender battle between men and women are being abused. Amber Heard is the hero, yada, yada, yada. Why would they do that? What is the agenda behind all of that? Who's behind the bots? It's not Amber Heard. It's bigger than that. Why would they want to divide us between the gender lines? Because they're failing anyhow. If anything, women are the most avid and passionate supporters of Johnny Depp online. And if you thought the cover-up on Twitter is stunning, what they've been doing all along is disgusting, wait till we get the dirty laundry off YouTube. Yep, that's the big one. A lot of you say, hey, you got a good channel. How come you don't have over 100,000 subscribers? Yada, yada, yada. Well, the channel was hot. Almost every video I produced gets #1 in the ranking. And then when I started talking about the Fed negatively and JP Morgan negatively and attacking those people by name, and most importantly, criticizing the draconian mandates, using facts, using reliable sources, quote unquote, the Washington Post, New York Times, Harvard studies, that's when things went sour. And unfortunately, the algorithms of YouTube are absolutely disgusting. You got hard-working content creators who produced unique content for YouTube, and they do the job. YouTube wants engagement. Okay, so I'm creating unique content every single night. I'm producing 30, 40, 50 minutes videos every single night. And the average viewer duration, by the way, is a stunning 30 30 minutes on average, and I'm giving YouTube thousands of viewers on a daily basis. What more engagement do you want? And there are other channels, by the way, who are doing even more than that, but they get hostile algorithms and they never get the exposure that, say, CNN gets. Did you know that CNN gets more viewership on YouTube than on cable? Why do you think that? Because the algos keep pumping CNN. This is a rigged game, folks, and it's finally being exposed. Elon Musk is disrupting the oligarchy, the system they've created, and they manipulated. The rigged game is being exposed. They don't like that at all. But folks, this whole fiasco, this whole saga, this whole drama of Elon Musk buying Twitter, it's not over yet, and it's going to get more and more exciting, and we're getting more details by the day. So if you want a sure bet, buy call options on popcorn, because we're going to need a lot of that. For example, the headline reads, Elon Musk could have a silent partner in his $44 billion deal to buy Twitter. Uh-oh. Who is the silent partner? I got a clue. Anyways, and you better be prepared, by the way, for the Musk versus Trump episode of this whole saga. As I've predicted, by the way, the whole bromance is gonna sour. Elon Musk is now not happy that Truth Social, whatever that is at number 1 at the App Store. Number 1 at the downloads, beating Twitter. He attacked it by saying it is a terrible name, the Truth Social, whatever. But here's the most interesting part. If Tesla stock continues to go down, at some point the margin calls are gonna hit, we could see a crash in Tesla, and Elon Musk will lose a fortune, and he might eat a massive bag from this acquisition of Twitter. So he has an exit deal for now. He can cancel the whole thing and pay a $1 billion transaction fee. Folks, once again, this is not over yet. It is about to get really, really, really interesting. So go ahead to the store and buy popcorn, because it's not going to last at the shelves. You're going to need it. We are going to need it. Let's move on and talk about the crazy action that we got today in the market. Up and down, up and down, up and down. And it hasn't been a good year for the dip buyers. It has been a slaughter. Matter of fact, the biggest slaughter since the 1970s. Why? Because the declines in the S&P 500 have been the longest since the 1970s. I wonder what happened back then. You buy the dip, you catch a falling knife. You buy the dip, you eat a pie in the face. You buy the dip again, you catch a falling knife. You buy it again, you get a bigger pie. And the pies could last for a long time. Why? Because the S&P 500 real earnings yield, meaning you factor in inflation, this is the lowest yield in history, meaning you got to be a dumbass to buy the S&P 500 right now. If you add the S&P to your portfolio right now, to your retirement account, you're doing a dumb deal because you have negative earnings yield. You're losing money factoring in inflation. But rest assured, what's keeping the S&P 500 from collapsing is the rigged racket of share buybacks. Why didn't Apple stock, for example, crash like the rest of them? Well, so far they bought over $82.6 billion in share buybacks. And folks, sooner or later, rebound or no rebound, Apple stock will crash. Whether we like it or not, because the Fed is about to tighten the monetary policy, ending the cocaine operation, the easy money policy. And as you're about to see, earnings are already slowing down. The economy is already showing concerning signs. So this is a bad mix. And Apple stock is going to go down either way. Whether we get a bump after earnings or a rebound or whatever. Eventually, it's going to go down. So all in all, Apple flushed down $82.6 billion down the toilet. They could have used that money for R&D to expand their products, to give us a technological edge over China, for example. They could have used that money to hire more people, American workers here in this country. They could have opened factories in this country. They could have invested more in the company. But no, they're flushing the money down the toilet. Why? So the iMob, Tim Apple and the likes, the executives, can cash in at a higher price, making hundreds of millions of dollars, if not billions, and who cares about the stock, the company, the country, who gives a shit? So long as the executives get richer. This is the racket of share buybacks. But let's hear what the experts think about the stock market. Well, the experts, the bespokes, say U.S. stocks ended a manic Monday in the green, but intraday bounces like this are not bullish, and we talked about that in details in yesterday's video. The experts at Goldman Sachs say the U.S. economy is likely to dodge recession despite the Fed's tightening. Okay, the experts in Morgan Stanley say the S&P 500 will fall sharply and join an ongoing bear market. Okay, and here was the big short, Michael Burry. He says there is an imminent market crash in his last tweet before deactivating his account once again. On the other hand, the experts at JP Morgan Chase, they say the stock market is poised to rebound this week as corporate buybacks return. And this is, of course, your favorite analyst, Marko Kolanovic. And I say for any rebound to be sustainable, both Marko Kolanovic and Tom Lee should keep their mouths shut every time they get out. Every single time they jinx the rally. Keep your mouth shut and the market will rebound. But we got news updates today about the whole Archegos fiasco, the implosion of Archegos. Well, Bill Wang is going to jail. He got indicted in the fraud case and he had to pay $100 million bond. And he said he cannot submit his passport because he lost his passport. And instead, he's going to submit his wife's passport. Oh boy, this is about to get really, really interesting. Bill Wang, what is he going to do? Leave the country all of a sudden? Private plane? Rumor has it Martin Scorsese is already making a movie about Bill Wang and Archegos starring Leo DiCaprio. But do you know what the next Archegos is? How about Archegos for Tesla witch Cathie Wood, aka Mama Cathie? Oh yeah, she's going down. She's going down big. Why? Because after hours, Teladoc, one of the largest holdings in RKKKK, went down by over 35%. My bet is by the end of the year, RKK will go down to zero. Yep, zero. Next, let's talk about earnings. What do we got today? We got the flying coffin, Boeing. We got Ford, Harley-Davidson, Spotify, PayPal, Qualcomm, and Facebook. Let's do Boeing, Spotify, PayPal, Qualcomm, and Facebook. We'll skip Ford and Harley because we did those last time around. And here it is. The flying coffin, Boeing, went down big today. Big time. Why? The revenues are down 8% year over year. The costs and expenses are down 1.18% year over year. That did not help the company because the revenues are down big. All in all, they lost over $1.2 billion last quarter alone. And I like to look at these earnings because they're leading indicators to what's going on in the economy. For example, look at passenger traffic when we pin it to the 2019 levels. Down across the board in every single region, North America, Latin America, Middle East, Africa, Asia, down across the board. So when they say, hey, we're seeing the reopening of the economy, the comeback of traveling, yada, yada, yada. No, it's not happening. On the other hand, when we look at air cargo traffic, it is up big time when we pin it to 2019 levels. Now, you combine this information from Boeing with the information that we talked about in yesterday's video from UPS, and you can see that inflation is not going to cool down anytime soon. There is more inflation in the pipeline. And I love these footnotes that Boeing provides in each slide because it is the worst attempt at putting a lipstick on a pig. They say, for example, broader commercial market recovery continues. Defense products and service demand remains stable. Oh, really? Let's look at that. Here's defense for you. The revenue is down big from $7.2 billion last year to $5.5 billion this year. The operating margins are down in a stunning fashion, down 16.9%. But hey, everything is stable. We're not falling apart or anything like our planes. They say in the footnote, focused on execution. Yeah, the execution of your passengers, productivity, and competitiveness. Oh, really? When it comes to the global services segment of Boeing, this one is doing okay. The revenues are up year over year. The operating margins are up year over year, because they have a monopoly. If you bought any Boeing planes, you got to use Boeing engineers to maintain these planes. We will look at commercial airplanes, the most important segment of this company. The revenues down year over year and the operating margins remain abysmal at negative 20.6%. But the footnote says, continued focus on 737 delivery and production ramp as well as remaining steps to resume 787 deliveries. We'll see. Then what about the cash? What happened to the cash at Boeing? The cash went down big. We're talking down from $16.2 billion last quarter, or I should say the fourth quarter of last year, down to $12.3 billion last quarter. But the footnote says, sufficient liquidity and still expect positive cash flow in 2022. Focused on strengthening the balance sheet. Well, you need better glasses here so you can focus a little more. And rumor has it, in another footnote, Boeing described the crash of 737 planes as the landing planes and fragments experiment was met with success. And of course, they're blaming the Air Force One program for the losses. No, sweetie. you got bigger problems than Air Force One. Next, we have Spotify. Let's see how that one looks. They say the monthly active users are up 19% year over year, and the subscribers are up 15% year over year. So far, so good, right? Wrong. The revenue year over year was up 24%, impressive. Quarter over quarter, on the other hand, was down almost 1%. But the cost of revenue also went higher by 24.45%. General and administrative costs went higher by 26.77%, and therefore you have a company where the growth rate in expenses and costs is rising higher than the growth rate in revenues. Not a good outlook here. This quarter, yes, the net income was higher, but it can be attributed to the finance income. Now, this is not a reliable way to produce positive bottom lines. You got to produce these positive bottom lines by increasing your revenues dramatically. This is not what's happening with Spotify, and therefore the stock went down big today. Next, we have PayPal. What's going on here? The good news is, and this is building on the earnings report that we got from Visa last night, the payment volume is up 15% year over year. So this is yet another evidence that the consumer is swiping those credit cards up and down, up and down, up and down, with no mercy at all, which, by the way, it's going to be disastrous. Let's say a year from now, when interest rates move higher and all of these zombies have massive amount of debt on their credit cards. Anyhow, the net revenues went higher by 7.45% year over year. The problem is expenses went higher by 15.65% year over year. Once again, you have the same dynamic in the growth rate of expenses exceeding the growth rate in revenues, and hence net income was down a stunning 54% year over year. Now, last time I checked, the stock is actually trading positive after hours, but you got to keep in mind the stock is extremely oversold, so it was bound to rebound whether the earnings are good or not. I mean, the stock is down from the top, 70%? And we have an update here. PayPal is shutting its San Francisco office, another added accomplishment to our governor, our beloved governor, Kim Jong-un Newsom, who is destroying this state with crime, homelessness, crumbling infrastructure, taxes through the roof, and now we have companies, the mass exodus of companies out of California. Next, we have Qualcomm. What's going on here? A San Diego company, by the way. Qualcomm revenues pops 41%, driven by Android phone chip sales. This is really interesting. And this is one of the reports, perhaps the only report, because Meta is fake, but this is the only report that could give the bulls any sign of hope, because it was pristine. Almost pristine. Look at the revenues, up 41% year over year. The net income is up a stunning 67% year over year. When we look at the different segments, the QCT, this is the chips business of Qualcomm, up a stunning 52% year over year. When we talk about the revenues, QTL, the licensing business, is down about 2%. This is the only alarming sign, and this is why I said it is almost pristine. But again, the majority of the revenues from this company comes from the QCT segment. When we look at the different segments of QCT, handsets were up 56% year over year. RF front end was up 28% year over year. Automotive, a stunning 41% year over year. And IoT, Internet of Things, up a stunning 61% year over year. And Qualcomm is up big after hours. Next, and the last one is Facebook, Meta, a disaster. Look at this. The advertising revenue by user geography, all segments are down, quarter over quarter, and in certain segments year over year. So this is really, really bad. There are some good news. For example, year over year, the revenue in the US and Canada went higher, but again, quarter over quarter, it's down. And here it is, more alarming, the revenue per user is down across the board, quarter over quarter, year over year, with exception of Asia Pacific. So this is not a good outcome for Meta. Now, why is Facebook struggling, by the way? Because it used to be, up until recently, a massive cash-generating machine. It was an excellent business, but it had to face the lunacy of Mark Zuckerberg and his absurd dreams, the overspending like a drunken sailor on so-called content moderators, hiring thousands and thousands of people to suppress your speech on Facebook, to monitor your speech on Facebook. Well, this is costing Meta an arm and a leg. Furthermore, the insanity of Zuckerberg, of this whole metaverse, which is, by the way, a mere glorified video game, that's all there is costing the company a lot in R&D spending. You have a good business. Your business is advertising. What's up with the stupidity of the metaverse? Nobody's buying that crap at all. Expenses are rising across the board, be it general, administrative, marketing, research and development, cost of revenue, everything is moving higher. So you have a company with a trend of declining revenue, but a counter trend of increasing expenses. In other words, the good times in Facebook are over. It's done. The best is behind us here. Look at this. The net income down big when you spend like a drunken sailor and you're not generating as much revenue because instead of concentrating on the competition of TikTok, you're doing this whole stupidity of the metaverse. And now we have the net income down a stunning 21% year over year, and even more stunning, 27% quarter over quarter. This is a horrific report. The good news is the stock is extremely oversold. It already lost over $500 billion. Once again, $500 billion of its value. So the stock is extremely oversold, and hence we're seeing a massive rebound after hours. The bottom line is, folks, from these earnings, all in all, we're seeing a theme. Number one, the dollar is destructive to corporate earnings. Number two, we're seeing a massive slowdown in volumes, all in all. We're seeing revenues moving down. We're seeing expenses moving higher. We're seeing companies having a hard time coping with this inflation. And we're seeing these growth companies, these super hyper growth companies, technology companies, slowing down dramatically. Not a good outlook for the stock market and the economy. But the good news for now is we're gonna get an oversold bounce, a technical rebound. But what happens after that is not going to be good for the stock market or the economy. And with that out of the way, let's move on to cover the stock market for you. And we start with the performance of indices today. And here we go. The Dow Industrial Average in the green by 61.75 points, or a gain of 0.19%. The Nasdaq pretty much flat, down 1.81 points, or a decline of 0.01%. The S&P 500 in the green by 8.76 points, or a gain of 0.21%. The indices pretty much flat, but it was a roller coaster ride. In the beginning, right off the gate, the Nasdaq was up big, and then it went negative. And then it went higher again, and then it went down, closing barely negative, pretty much in the flat line. It was a roller coaster ride indicating lack of conviction by the buyers and the sellers. Everybody's afraid of what's going to happen from earnings, but the more earnings we get, the more conviction the buyers will have. Here are the sector's performances today. Leading the pack at number 1, capturing the gold medal, materials, and at number 2 for the silver, energy, number 3 for the bronze, consumer cyclicals. The laggard of the day, big time, was communication services, aka Google, but so was Netflix and Snapchat and the rest of them. Spotify, anything regarding subscription and membership is down big. The advance to decline ratios, NYSE 48% advancing versus 48% declining. The Nasdaq 36% advancing versus 57% declining. By the way, look at the 50-week lows, 621. 52 weeks lows in the Nasdaq. Unbelievable action. Moving on to commodities. Energy futures, crude was pretty much flat. The WTI and Brent pretty much closing at the flat line. While we have gains for gasoline. Gasoline is up 2.3%. Heating oil was pretty much flat. It shows here that it's down over 11%, but this is a mistake. Every time they update the contracts on Finvis, they do the same mistake over and over again. It shows as a loss, but it's just the contract being updated to the new one. Yet we got gains for natural gas up over 5.5% today. What about softs? Lumber is moving higher by almost 2%. We have gains for cotton big time, over 3.5%. Likewise, we have gains for both OJ, a little under 1%, and cocoa, a little over half a percentage point. We have sugar in the flat line, while the loser of the day, coffee, down almost 2.5% today. Metals, muted across the board. We have modest losses for both gold and silver, down about 1% apiece. But besides that, we have flattish activities for platinum, copper, and palladium. Meats, down across the board, down about 1% for both live cattle and lean hogs futures, while feeder cattle futures down a little over 2%. Grains, we have gains across the board, specifically for oils. Soybean oil is up about 3%. Likewise, canola is up about 1.5%. We talked about Indonesia banning palm oil exports. This is supporting soybean oil and canola, rapeseed oil, all of them to move higher. But we also have gains for corn, a little over 1.5%. Soybeans also up over 1%. Soybean meal up almost 1%. Yet we have down days for oats futures, down over 4%. Rough rice and wheat also down, be it modestly. Here are some commodities news for you. We continue to watch the development over at Europe, with Russia banning gas for both Bulgaria and Poland over the failure of these two countries to pay in rubles. And of course, this is a move by Vladimir Putin to add pressure on Germany. Germany is the big kahuna here. Of course, Putin's not stupid. He's playing chess. We are playing checkers. He's not going to cut gas supplies to Germany, but he's going to take a small hit from cutting gas to Bulgaria and Poland to send a message to the Germans that if you don't pay in rubles, you're next. And right away, we saw European gas prices moving higher by over 24%, and German power prices are moving significantly higher, adding more and more pressures in that particular country. When you think about it, the move that Putin did is banning gas for both Bulgaria and Poland, sending the prices of European gas higher. So now the Germans are paying more. So in other words, Putin is punishing Germany. Why? Because Germany, Chancellor Olaf Scholz, is under a lot of pressure from both the US, Russia, and Germany. German politics matter the most for him. Labor unions, etc., etc. The United States want Germany to send more weapons and supplies to Ukraine. The Russians say if you do that, we're going to cut gas, we're going to punish you, so watch out, Germany. And this is a form of punishment. You're going to pay me more. You want to send those tanks to Ukraine? You're going to pay me more for gas. On the other hand, the internal politics in Germany is about inflation. The population don't want more inflation. The labor unions, the factories, industries are warning that if gas supplies get cut from Germany, the German economy will go into a recession. This is the finance minister's words. And of course, Japan is being punished too. Japan relies on a lot of liquefied natural gas, LNG, but they're paying an arm and a leg for them. And the prices continue to move higher and higher and higher. So the question we must ask all of us, what is the end game here in Ukraine? Because we will see more inflationary pressure across the globe, sending many economies into a recession, be it Germany, be it the US, be it Japan. So what is the end game here? We continue to escalate, sending billions and billions of dollars worth of weapons over Ukraine. The weapons get blown up by the Russians. They get lost, whatever. What is the end game here? Because at some point, Putin is going to eke a win economically. The ruble is moving higher. It recovered all of the losses since the invasion began. He is now retaliating against other economies, be it the Polish economy, the German economy, the Japanese economy. He might win in all of that. He might also win in the ground war in Ukraine. What is our plan B? What is our exit plan here? Because if he does win, it will be the biggest humiliation for the West in the 21st century. And it's going to have political ramifications in these countries. It's going to make Olaf Scholz look bad. It's going to make Macron look bad. It's going to make Biden look bad. And there are going to be ramifications in these countries. Losses of elections. And therefore, I say, what is the exit plan here? On top of that, we have Algeria getting into a spat with Spain over the Sahara Desert, and now Algeria is threatening to cut natural gas supply to Spain. This is a major problem because Algeria happens to be the number 3 largest supplier of natural gas to the EU. Cutting supplies to Spain will send natural gas prices even higher. And we got bad news here in California. If you're a Californian like me, we're going to pay more for gas because Governor Kim Jong-un failed to convince lawmakers to pause the hike. They're gonna hike fuel taxes while we have inflation. Absolute lunacy. And lastly, when we talk about grains inflation and fertilizers, Indian farmers are facing increased demand because wheat supplies from Ukraine and Russia are a no-go. So the demand is shifting to Canada, China, US, all of these wheat suppliers. Argentina is another one too, but India is a reliable one. The problem is Indian farmers have to pay more for fertilizers due to the war in Ukraine and the sanctions against Russia, the top producer of fertilizers. So now the Indian government is approving $8 billion worth of subsidies for phosphate-based fertilizers to farmers. Moving on to the options market, the big casino, the volume is down big. No action at the casino at all. Nobody buying puts, they're buying puts, but they're not buying calls. And therefore, any attempt for a rebound is not happening. It's not sticking. You see the charts are taking off and then they fail again. Because for any rebound to be sustainable, you got to have participation by either the institutionals or the retail crowd. The best way to sustain any rally, to ignite and sustain any rally, is the participation of buying call options. Because say when the retail crowd buys call options, the market maker has to hedge by buying shares, and it creates a twofer to push the indices higher. We're not seeing that yet. and this is a bad sign for the bulls. But the hope is for now that after we got earnings from Microsoft, Alphabet, Facebook, PayPal, Qualcomm, we're starting to see in certain companies that it is not that bad yet, and therefore it could, keyword could, encourage the dip buyers to buy some call options here and ignite a rebound rally. But for now, with these volumes, you're not going to have a rebound rally. In any case, Apple came at number one at around 680,000 contracts traded for the name today. About 60% of those were calls. And at number two, Tesla, the souffle, at around 670,000 contracts. About 49% of those were calls. They continue to buy more puts on the souffle. At number three, FB, Facebook, at around 575,000 contracts. About 40.5% of those were calls. Lots of put options buying. Here's the good news for the bulls and the dip buyers. A lot of folks been buying puts. A lot of folks been hedging and shorting. Let's say by tomorrow we see a rebound and we get more participation in the options market, more buying of calls. That could force a lot of shorts to cover. We could see a massive pump higher. But a lot of things have to happen before that. You need the conviction from options buyers to buy call options, forcing the shorts to cover. You need to see the liquidation that is happening right now by certain institutionals and the large type whales to stop, and then we could see a reliable rebound higher. For now, let's move on to the unusual activities that took place in the options market today. We start with the ticker BA, Boeing, the flying coffin. The name was down big today and somebody's betting for more declines to come by buying the 140 puts for the expiration date May 6, with the expectations the name could go down by more than 9% by then. They paid around $1.30 a piece to enter this trade, all in all spending around $3 million. What about the ticker EMB? This is the JP Morgan Emerging Market Index. They're buying puts, the 86 puts. Perhaps this is a bet that we could see the dollar index moving significantly higher. Even more than it's already doing. They bought the 86 puts for the expiration date June 17th with the expectations that the name could go down by more than 7% by then. They paid around 55 cents a piece to enter this trade, all in all spending around $500,000. What about the trade for the ticker FCX Freeport McMoran? They're buying more puts. Interesting, they're betting perhaps that we will see more slowdown from China. They bought the 38 puts for the expiration date May 6 with expectations that the name could go down by more than 9% by then. They paid around 40 cents a piece to enter this trade, all in all spending around $250,000. What about the ticker CFLT for Confluent, a cloud name? We got earnings from Microsoft. The growth in cloud was assuring, quote unquote, but regardless, somebody's buying puts here. The name is already down over 50% year to date. They're betting for more downside to come by buying the $30 puts for the expiration date July 17th, with expectations that the name could go down by more than 6% by then. They paid around $4 a piece to enter this trade, all in all spending around $2.4 million. And lastly, what about the ticker NCR for, you guessed it, NCR? They continue to buy calls on this name, the 35 calls in this case, the expiration date July 15, with expectations that the name could move higher by more than 22% by then. They paid around $1.30 a piece to enter this trade, all in all spending around $700,000. And here's the last trade I want to share with you for Facebook, FB. Somebody bought the 175 calls with the expiration date of this upcoming Friday, and they got it right. They're going to score big, big, big. Moving on to the heat map analysis, it is all over the place. Every man and woman on their own. If the company produced good earnings, you get a bump. Case in point, Microsoft and Visa. If the earnings are not good, you're going down. Case in point, Google and Boeing. The good news is we got a rebound in the inflationary sector of the stock market. For example, the agriculture names went higher on the heels of ADM's earnings. Steel names went higher. Copper went higher. FCX, Freeport McMoran. Aluminum, Alcoa went higher. Oil and gas went higher. Exxon was up big today, almost 3% in the green. Now, my assumption is we will see a rebound in technology and communication services. Software, chips will rebound higher into more recession on the heels of Qualcomm's earnings. The most important question is it going to happen via a rotation, meaning out of materials, energy, back into tech and software, chips, or is it going to happen via short covering, where we could see the entirety of the market moving higher without any losses or rotations out of energy and materials? If scenario number one happens, then you have solid basis that technology will continue to rally from this point on for, let's say, all the way to the Fed's meeting, depending on Apple's earnings, because we're seeing money coming out of the winners, or at least used to be winners, all the way to the losers, buying the dip. If the latter happens, if we see just short covering rally, then the sustainability of that rebound will be under question. Let's talk about some corporate news here. We start with Robinhood. Robinhood is down big today. Off the news, they're cutting over 9% of their full-time employees. And I say, are the margin calls already heading or what? Then we have Carvana. Carvana went down big today. And the HYG also went down big because it appears that we have Apollo now wants to restructure Carvana's junk debt. This company could go bankrupt, by the way. The good news is the founders, the Garcias, cashed out already at the top last year. And then we have Lucid Motor. The name moved higher today on the news that the Saudi investment fund is going to buy over 100,000 vehicles in the next 10 years. Likewise, we have news for another EV manufacturer, or Fisker. The CEO says he deleted his Twitter account after Elon Musk took ownership of the company. And I say goodbye, Felicia. And then we have Carnival. Carnival, of course, changed CEOs. Outgoing CEO Arnold Donald was pumping the stock on CNBC not so long ago, saying that we're seeing the best quarter ever, reservations are the highest in history, yada, yada, yada. We knew all of these were lies. The cruise business is going down the toilet. These companies will go bankrupt when the recession happens. So Donald, poof, gone. And then we have news for another transportation company, Delta Airlines. Believe it or not, when you board a plane and you see the flight attendants saying, hi, how you doing, good morning, they're actually faking it because they're not getting paid for all of that. They only get paid when the planes take off. So now the flight attendants fought back and said, hey, you got to pay us. If we're doing work for you, we got to get paid. And they scored big, and this is another major win for unions and labor, yet another source of pressure for corporate margins and wage inflation. Moving on to the heat map for the ETFs, muted action across the board. Yet we have some winners. The XLB materials, XME also went higher. Energy, XOP, XLE, OIH, all higher. Technology was higher. XLK was higher due to Microsoft, but chips, SOXX, SMH remained down. VIX proxies went higher, but perhaps today was the peak. And then we have identical performance between growth and value. When we talk about international markets, we're seeing a rebound in Chinese equities, the FXI, the MCHI, all leading the gains today. Likewise, EEM, emerging markets are leading the gains. So could this be the leading indicator that U.S. equities are also about to rebound in tomorrow's session, perhaps? When we talk about commodities, energy is up while precious metals are down. Gold, silver all down, uranium up slightly, but the ticker TAN for solar up big, along with the UNG and BOIL for natural gas. Anyhow, let's move on to charts, and we start with SPY, the S&P 500, an hourly chart. We were anticipating a rebound from 416. We got the rebound. The chart went higher all the way to 422. It faced resistance. It did not make it. It got rejected, and it flushed down all the way till the end of the day. Not quite all the way back to 416. So, if we zoom in a little more, we can see the support at 416, the resistance at around 422. But is what we're seeing right now a formation of an ABC pattern? And if it is, then it's supposed to take us all the way above 422. It becomes support, and then we face 426 as resistance because it happens to be the top of the reversal candle. And here's the daily chart for the continuous contract for the SPY, the S&P 500. Now, the chart ran a retest at 4,232. Give it a shot. See if it's going to crack or not. We're not going to say that this is a rejection because the candle closed in the green. It did not flush down, losing another support. So we're going to say this is a pushback. The resistance pushed back, and the chart did not make it above 4,232 by the end of the day. The good news here, number one, we got earnings out of the way. Number two, the charts are getting really oversold. Not quite for the continuous contract, but it is oversold enough, given the earnings, to initiate a short covering rally to get us all the way above 4,232 by tomorrow's session. And if that happens, the challenge for the bulls becomes, can you keep 4,232 by the end of the week? If the answer for that is yes, then next week we could see another rally all the way to 4,384.5. But if the bulls lose this support, 4,232 by the end of the week, then we're going down even more to 4,102. Moving on to an hourly chart of the Qs, the Nasdaq. Again, we got a rebound off 316.5, and the rebound got us all the way to the top of the reversal candle, the last hourly candle of yesterday's activities, and it could not make it above that number. Let's say it's around 321. And then the chart went down all the way to retest 316.5 as support. The question is, will 316.5 provide support once again and we see another rebound higher? I think you know the answer, and the answer for now is yes. looking at the futures. So is what we're seeing right now another formation of an ABC pattern? And if it is, it will get us all the way to the top of the reversal candle at around 327.66. And here's the daily chart for the continuous contract for the NASDAQ. The chart attempted to run a retest all the way to 13,300 as resistance, which by the way coincides with the trend line in yellow. It used to be support, now it is resistance. It did not make it all the way there, but we're not seeing a reversal in the candle, meaning we did not see a rejection after that retest or the attempt of the retest. Now we're seeing the momentum indicators appear to be bottoming. We're seeing the volume moving higher. We're seeing earnings popping after the bell. So could the bulls find the energy to reclimb 13,300 and the trend line of support once again? If they do, this will be a major win. And next week, we could see a rally all the way back to 14,000. Absent of that, we will see more pain to come. Here's the hourly chart for the IWM, the Russell 2000. It is going back and forth at around 188, the last support. You lose that support, it's over. So the bulls better hope that we could get a rebound by tomorrow's session that get us all the way above 188 as support solidly. What does that mean? It means recapturing 191.5 as support. Absent of that, a closing below 188 for the week will initiate the crash in the IWM. The Dixie, what's going on here? It got all the way to 103 and it peaked its head above that and then it moved down. The question is, everything is getting overextended, technically speaking. The RSI, the MACD, the candle pattern. Could we see a pullback from 103? This is what we all should hope for, because if the Dixie continues to go higher, stocks will go down, commodities will go down, everything will go down, and the rise of the dollar will be destructive to corporate earnings, which will accelerate margin pressure, leading to more unemployment. Keep in mind that the Fed is still here. It's going to tighten. So we're going to have a double whammy on corporate America by the dollar and the Fed and inflation. And we will see severe unemployment in the economy. And of course, the gold bugs are hoping that the dollar is going to top, because if it doesn't, gold is going to go down big. Gold is already losing the support of 1,895. If the dollar continues to move higher, if we don't have a pullback in the Dixie by tomorrow, then the weekly closing for gold will be ugly. It could take us all the way down to 1,840. So if there is no rebound in gold by tomorrow, if there is no top in the dollar by tomorrow, you might want to book some profits in gold. Here it is, Brent, UK oil. What's going on here? It appears that the chart is facing the resistance at around 105.84 in a bullish formation. It's a bull flag formation. The assumption is for now that we will see a crack above 105.84, which will take us all the way to 114 and then eventually to 118. But you cannot assume that, you cannot bid on that until the breakout happens, because the possibility for rejection and a pullback from 105.84 is still here. And here it is, the daily chart for the 10-year yield. We got a rebound today, yet we still have negative divergences in both the RSI and the MACD. The bulls, the NASDAQ bulls in specific, are hoping that this chart is going to pull down all the way to 2.5 at least for any relief rally to be sustainable. Because if the 10-year continues to move higher, we will see the TINA argument getting weaker and weaker and weaker, and valuations will have to be trimmed in the NASDAQ. Here's the TLT, a weekly chart. We're seeing a down day, but there is still hope for the TLT bugs to move higher. We still have 2 days. The volume is still down for the week. We have 2 days worth of activities. We're not asking the chart to take us all the way back to 128 as support by the end of the week. We're asking the chart to take us all the way to close the gap at 125 by the end of the week. Both the RSI and MACD indicators are getting severely oversold, and they're curling their way higher. Look at the RSI, for example. It appears that the RSI wants to break the negative divergence, and then the confirmation will be the MACD indicator producing green impressions on the histogram. Moving on to the VIX 4-hours chart. What's going on here? It continues to move higher. The resiliency of the VIX, the Johnny-come-latelys buying puts. But the good news for the SPY bulls is the following. We're seeing the RSI indicator in negative divergence. This is an indicator the strength in the VIX's rally is coming to an end. It is weakening significantly, even though it continues to move higher. The MACD indicator is also weakening. Look at these green columns. They're getting shorter and shorter and shorter. We're about to get a crossing, producing red impressions on the histogram. And if that happens, of course, the SPY bulls are hoping that the VIX will go down in a flush down all the way to 24.29. The bears, on the other hand, are hoping that the VIX will reignite and we will see a move higher above 33 once again. The problem is the momentum indicators are not supportive for that. So the SPY bulls are now having a slim advantage. What about the VXN 4-hours chart? Once again, look at the resistance at around 40. The VXN pulled back from 40 once again. It is in a slim negative divergence. On top of that, the MACD indicator is also plateauing, and soon enough it could produce red impressions on the histogram, and the VXN could go down all the way to, let's say, 30 as support. And if that happens, it will be good news for the Nasdaq bulls. What about Apple, the daily chart? We have an attempt for a retest of yesterday's highs. The chart did not make it all the way there. Matter of fact, it flushed down all the way till the end of the day, losing the support, now resistance at around 157. The chart remains in negative divergence, both in the RSI and the MACD. Could it rebound higher on the heels of Meta? Yes. It could recapture 157 as support. However, at the end of the day, Apple's earnings will be the make or break moment for the stock, and by the way, the stock market too. An example, we could get a rebound in tomorrow's session based on Meta's earnings. And then comes Thursday and Apple disappoints, and there goes your rebound. So let's zoom out to a weekly chart and discuss the possibilities. Possibility number one, we are in a negative channel for now, and the chart should go down to the lower boundary of the channel, and that would be a loss of around 5.5%. Bear in mind, we have negative divergences on both the RSI and the MACD indicator and the weeklies too. The bulls will counter and say, not too fast. What if this is an ABC pattern within the channel? And the C leg could take us all the way to the upper boundary of the channel, if not more than that. So these are the possibilities out of Apple's earnings. Nothing will be conclusive even if Apple rebounds by 1% or 2% in tomorrow's activities. Moving on to Tesla, the souffle hourly chart. What's going on here? The chart rebounded from around 886 as support, and it's going back and forth, retesting 886 as support. We have severe oversold conditions on the RSI and the MACD. Look at the MACD on the hourly, for example. It is about to change from negative to positive, producing green impressions on the histogram. It appears that we have a double bottom for now at around 886, 885, doesn't matter, but it is a double bottom for now if we get a rebound. If the rebound happens, we will face resistance at around 918, and then we'll take it from there. Tulips, Bitcoin, what's going on here? Look at the MACD indicator. It is gathering momentum. It's about to cross, creating green impressions on the histogram. It's going to happen sooner or later. And if it happens, we will see a pop above 42,000. That will become support once again. And the good news for tulip bulls is the following. We are seeing the volume moving higher slightly, yes, on down days, but also on rebound days. So perhaps there is some energy on the sidelines. They just need to see something. They need to see a pop above 42,000 as assurance that it is okay to dip your toes and buy Bitcoin. And lastly, AMC. We're going to do a 15 minutes chart this time around. We have a sloping line of resistance. The chart faced that resistance over and over and over again. It had a mini breakout and it failed to continue that breakout. So now, are we seeing a saucer bottoming formation? And is AMC about to break the resistance of the sloping line? And if it does, then the upper range, the high of the reversal candle, the failed attempt at around 1709 will be the next resistance. Moving on to the conclusion of this video. What do we have on the economic calendar tomorrow? We have initial jobless claims for the week, and then we have the first estimate of the GDP, and then on the earnings calendar, we have McDonald's, Caterpillar, Hershey's, Amazon, Roku, Apple, Twitter, and Intel. An interesting day. It's going to be hot. Buckle up your seatbelts. A lot of action is about to come. But for now, this is all I got for you. Thank you for listening. Thank you for watching. I will talk to you again tomorrow.